I need a new monitor. My third monitor just stopped working. What?
Do you want you want me to play a violin for you or something? I don't know what to tell you. Get a new monitor. Hey guys, JC Perez here, founder of AllStarCharts.com, and welcome back to Pardon the Price Action. I'm joined as always by my man Steve Straza. Steve, communication stocks just hit their highest levels since June yesterday before backing off a logical level. Is the path of least resistance now higher for communications?
Not yet. I would say we're getting there. We're getting close. I love this chart because this is like just such an excellent illustration of what's going on with growth or tech these days. We're seeing a lot of these big bases, right? So if we're talking about this XLC chart, this is Spider Communications. It's a lot of Google. There's a lot of Meta. There's a lot of Netflix, but it's not done yet, right? If you look at a chart of Netflix or Meta and then compare it to communications, Meta's completed that base. I like being long Meta, right? Pick the strongest names. I don't think the index is quite there yet. 200-day moving average is curling up. We've got some overbought readings, but we got to get back above those year-to-date highs and the August highs from last year to complete this reversal. Then the path of least resistance is higher.
Yeah, it looks like a bearish to bullish reversal to me. You know, pretty classic. The question is, does it resolve higher? I like what you pointed out, how things like Meta and Netflix have already resolved these bases higher, right? So if you're wondering where the index is going to go, what are the components doing? And they are breaking out. They are indeed resolving higher. Shout out Sean over at All-Star Options. The best trade that we've put on all year has been long Meta. It was a risk reversal. You were in that meeting as well. Best trade. Last week, he's like, hey, JC, should we do a victory lap on Meta? I'm like, no. Yesterday's home runs don't win today's ball games, as Babe Ruth said. So let's focus on the next one.
Yeah, Meta is the best stock in the S&P 500 this year. So there you go.
Fun fact.
All right. On Chegg's earnings call, management discussed the disruptive impact that ChatGPT is already having on the online education industry. I got a quote from the call for you right here. Since March, we have seen a significant spike in student interest in ChatGPT. We now believe it is having an impact on our new customer growth rate. That was Dan Rosensweig, Chegg CEO, yesterday. So a lot of these stocks are under pressure today on the heels of this news. What say you about these online education names?
I mean, to me, this is all pretty classic, right? You know, you've got a company that's just getting crushed, and this is just who they're blaming next. You know, notice how the stock had already been falling for quite some time, had absolutely crashed. It was already down, 80% off the highs in a little bit over a year before ChatGPT even existed, right? So I feel like we've seen this story again and again and again, and the CEOs and the management team, they blame whatever the easiest thing to blame is, but as usual, price already sniffed that out. So what is this? It's bad news coming out in the direction of the underlying trend. Pretty classic to me. You know, you leave it alone. Especially if it's below that IPO price from 2013, you got to leave it alone.
Yeah, I mean, you make a great point. The stock was already in an 85% drawdown before getting cut in half today. So the writing was very much on the wall. What I will say is this is kind of affecting the whole space. Like Pearson's in the next chart, this is a traditional publisher, right? So I think just in general, it's going to be really hard to be in the business of selling information that people can get for free somewhere. And ChatGPT is going to disrupt this whole space. I think that even the winners in the space, if you look at like this chart of AI, even the companies that are supposed to be benefiting from AI aren't trending well. I think if you're investing in AI, stick with the big guys, your Google, your Microsoft, your Apple. Those are going to be the winners as usual.
And we're seeing it. All right, First Republic, another one bites the dust. Straza, FRC just went into FDIC receivership over the weekend, sold to JP Morgan. It looks like PacWest is next. Are these bank failures ever going to flow through to the broader markets?
Yeah, you know, I think we all expected that more were coming, right? We've been talking about this, waiting for the next shoe to drop. You know, First Republic's gone. Looks like PacWest is going to be gone soon. I know you have a take on this. You know, these companies are small, and from a market cap perspective, they're not going to move the needle, right? It took them this long to finally move the needle on the regional banking index, all these blowups. So it's worth remembering, though, that these banks were $20-30 billion stocks not long ago. And go to the quad pane chart. That's really the point I want to make about all of this. when you look at the market cap scale of these groups, right? We have the big six banks, your Monsters, your Wells, Bank of America, JP Morgan, Goldman, Morgan, whatever. Then you have just the bank index itself, KBE. Then you have the regional banks, KRE, which we even break out to the super regionals, right? And then we have the community banks. And as you go on down that market cap scale, it gets weaker and weaker and weaker. And I think community banks, as they often are, that's why I love this index so much, were the tell. This thing has moved straight lower, didn't even coil in a bearish continuation pattern like KBE and KRE did. It's just, been falling in near vertical line. I think that called the move in KRE. The big question now becomes, do the big banks that you see in the top left of that chart, if they do, I think XLF follows. We're below 3050, and we're having very different conversations than we're having today.
Yeah, if financials are back below those 2007 highs, it's a big problem. You're probably looking at small caps breaking down, also making new lows. I think none of that bodes well for the overall market going into the summer. That's the big level. So far, they've been able to hold it, which has been very impressive. But as these dominoes keep falling, when's the last domino to fall? Clearly, we haven't seen it yet, right? The question is, how systemic does this become? How much does this flow into the broader market? So far, it hasn't, right? Or has very little. So we're waiting and seeing, right? With every day that passes, we're getting new data, right? And I think this is the big test, the XLF, right? If we're below those former highs, there's nothing but trouble below 30 and a half for the XLF. There's nothing but trouble down there.
I couldn't agree more. I think if we're still talking about bank failures a month or two from now, I don't think we're still going to be talking about home builders making new highs.
Agreed.
Very strange.
Yep.
Next topic. Let's do it. Sugar. First it was sugar futures. We've been all over it. Now it's sugar stocks, or as they call them, confectioners. Seems to me that anything that touches sugar is an area of leadership these days. Are you a buyer?
I mean, listen, we were talking about McDonald's and we've been talking about Yum Brands. And here we are talking about things like Mondelez, which makes all the candy bars and stuff. Pepsi, you've got sugar futures continue to do well. I think some of that's more a little bit of current timing right now, but there's good business in just poisoning people with sugar. And what's interesting is you're looking at, drug stocks like Novo Nordisk and some of these others that have, from my understanding, from my fundamental friends, very good drugs to treat obesity and things of that nature, which is what these sugar products are creating. So as investors, you're able to double dip. Do we want people dying of eating too much sugar and this and that? Of course not. But at the end of the day, trends are trends. It's just letters and math. These are the types of stocks that have been going up. McDonald's, Yum Brands, Mondelez, right? What it is.
Sugar is what we would call a secular trend, like it or not, right? These stocks are really hot right now. I like sugar futures long against 24. And then these are all the big boys in the space too, right? So we've got to watch staples at an index level. They're really showing some leadership. Hershey's looks great, but you're even seeing it when you go down the line to things like Monster. So anything that touches sugar, really, really strong these days. I have a hot take. These companies just wear inflation like no other. I mean, they work that inflation, they build it right into the price, and they don't miss a beat. So I think the market could be pricing in some sort of resurgence in inflation because these are the names that can take it on the best.
All right, we're out of gas. Energy's under pressure this week. It's happening at a critical level, by the way. Are these 2018 highs going to hold? And what implications do they have here looking at crude oil?
Listen, we were just talking about these 2018 highs with financials, right? That's that 30-50 level. The 2018 highs are really the same as the pre-financial crisis highs. When you move over to energy, another cyclical group that we need to watch very closely right now, vulnerable is the word I would use, right? We're just teetering right on the brink here. Crude oil, 75 is that line in the sand. You got to look at the stocks today. They're having one of their worst days of the past year. XLE, XOP, XES. XLE against that shelf of former highs from 2017, 2018. It's about $80 there. I think you gotta approach the entire space with more caution if these levels are violated. And we're there right now. We should know in a day or two.
Yeah, for sure. And across the board, right? Not just crude oil. Look at heating oil futures back towards those former highs. Look at gasoline futures back up to those former highs. Of course, crude oil back up to those former highs. It's right there. I think financials and energy, important spaces that are really flirting with trouble. It's interesting, some of the bifurcation that we've seen in things like healthcare and technology really consolidating in a much more healthy manner, While you have things like financials and energy to the downside, correlations have come off over time, sector to sector. And these are two that are front and center because, like you said, they're right on the brink. They're flirting with, I don't want to say flirting with disaster, but at the very least, nothing good happens below those levels. Nothing good at all.
Absolutely. And if I could just add, I'll give our viewers a quick exercise. This is what we do internally. We weigh the evidence when we have something like this. And I love it when we have such a clean level like this. Make a list of which ones are above the 2018 highs and which ones are below. If that list of indexes, whether it's crude oil or heating oil or gasoline or Spider Energy XLE is below the 2018 highs, then the rest of those energy assets are likely to violate the 2018 highs as well.
Yep.
All right. This game that we like to play. I'll say a word or phrase. You're going to tell me the first thought that comes to mind. Today's word is pause.
Honestly, I would say thank God, right? So I don't have to hear about it anymore, mostly, right? For me, you know me, I'm not about the Fed. I don't really care about that. I'm interested in what the interest rate market is doing, what the bond market is doing. I'm interested in what the curve is doing. I don't care what the Fed said today or didn't say. I'm more interested in the market reaction, right? You and I know people who are very smart and can tell you what the little idiosyncrasies of all these different economic, that's great. Fantastic. I'm mostly interested in how the market reacts to those things, right? I want to know that there's an event coming. Terrific. I want to be blindsided by added volatility that day. Of course. I want some idea as to how the market is positioned going into that event. And if there was a massive unwind after that, that's interesting. But the details of, they're going to hike, they're going to pause, they're going to lower, the discount window, I can't. I want to know if they were leaning in one direction and what happened after that. That's mostly what I'm interested in. So what comes to mind when you say pause? I say, thank the Holy Lord.
I would say no kidding, and for how long, right? Because like you're saying, the things that we pay attention to, we saw this pause. We saw the writing on the wall for this pause since last summer, right? Just look at the bond market. Bond market started calling bullshit a long time ago. The market was telling Powell he was going to pause before Powell was telling us he was going to pause, right? Now, when I look at Fed funds futures, it doesn't seem like a pause to me. We got 2 or 3 rate cuts priced in before year end. That's not a pause. What a pause is we raise to a certain level and then we pause and go flat. But now the market is saying we actually start cutting rates. So that's not a pause to me. It's going to be really interesting to see what the Fed does into the back half of this year.
Then we pause. I like how you said that. Yeah, I mean, whatever. Just get it over with so I don't have to hear about it anymore.
I'm doing a Twitter Spaces to talk about the Fed tomorrow. What should I say? I guess I got to pay attention to the announcement.
That's your problem.
Yeah.
All right, 2-minute drill. Uber versus Lyft. What do you think?
For two companies that are literally in the exact same business, boy, oh boy, it looks like one of them is doing things right and the other one's doing everything wrong. I'm a fan of Lyft too, so I don't know what's happening here, but Uber's earnings report this week was just, they knocked it out of the park. Massive revenue growth. They're still growing revenues at like 30%. These are the growth stocks that you want to be in. They're going to turn a profit for the first time next quarter. Everything's looking good. They got their freight business, their delivery business, really hitting on all cylinders right now. And when I look at the chart, it reflects that. These are the patterns that we want to be buying in the growth space, right? We go from downtrend to sideways trend, that little basing process, that bottoming process, and then we get an upside resolution that tells us the path of least resistance is now higher. Momentum is already in a bullish regime. I think if we take out this little horizontal support level here around 33, it's go time, and you could be a buyer of this. I wouldn't say the same about Lyft, though.
Funny you talk about how, if these are the types of charts that you want to buy and things like that. To me, it looks like growth. It looks like technology. A lot of these charts look exactly like this. We looked at Meta and Netflix, but right. There's so many growth stocks, mid cap and 30 billion, $40 billion companies that their charts look exactly like this. This Uber peaked, when a lot of other stocks peaked. Bottomed last summer when a lot of other stocks bottomed. They now are flirting with those highs, like things like the S&P 500 and indexes like that. I got a confession to make, Mr. Straza. You're talking about how Lyft must be doing everything wrong. True story. I have never had a Lyft account. How about that?
Really? No kidding. All right. Lyft hater.
And I'm not just a hater, more like it's just one thing that I just haven't done. Uber was in New York early, so we were using Uber all the time, like early on. And then I just kind of stuck with Uber like that, I guess. No hate on Lyft. I never had an account. And I guess clearly, not to say I'm smart or anything, but clearly other people agree, Straza.
I've never looked at either of these companies' earnings reports until today because I've never really been interested in buying these stocks. It's been a bear market for a good amount of the time that they've been public. But after seeing Uber's report today, I mean, it was really impressive. They're doing everything right. I really like that Dara Khosrowshahi or whatever. I think he's running the show well over there. He's the CEO. So this is one to watch. And whenever you're like analyzing two stocks in a similar group, like we do this with stuff like Square and PayPal, right, JC? Like just chart them against one another. We always want to be in the leaders. And if you can't tell by looking at the absolute price charts, which one's the leader, which one is the leader here, just chart Uber against Lyft and it's very clear, right? We want to be in Uber.
100%. All right, hot takes. What do you got?
So let's just keep it on theme here, right? So AI, I think, AI is on every, news cover and news story today. There's specials, on cable news about AI these days. Everybody's talking about it on Twitter. You can't be careful enough. I really, really think that there are more opportunities to lose money from the AI trend than there are to make money. And that's at least true for public market investors. When I look around at our options, to get long this AI theme, I don't see any good ones outside of the mega cap tech names. So I think you really want to be careful because you are going to see companies like Chegg get disrupted by AI, right? And you're going to see, I think, more downside from these AI changes than upside, at least in things that we could buy as public investors. What do you think?
Yeah, for sure. As a user, I always find it fascinating that you start using things just because they're fun. It's fun to use. It's interesting, not that there's any real purpose. I think that's a good place for it to start, at least personally, in my experience, as far as investing. The big companies that are investing the most, I think they're going to win, and you're seeing that. And then the disruption, right? They're probably going to cause a lot more damage to a lot more companies, right? Because a company like Microsoft is so big, it's hardly putting a dent in it, at least right now. But what it is it's destroying others. So I think it's great. You love to see technological disruption like that. People lose jobs, actually creates new jobs. A lot more opportunity. So I definitely look at it as a good thing, a nice cleanse of old, slow tech getting faster. I know internally at All Star Charts, we're incorporating it as well. We're only going to incorporate it more, not less. So I think that's interesting. And my hot take, just want to say what's up and a big shout out to the CMT Association. Great event last week in New York City. A lot of old friends, a lot of new friends. How about the Venezuelan contingent? Keeps getting bigger every year. I feel like they're like multiplying. Good for them, right? Wearing their pins with their flags and stuff like that, right? Shout out Alfonso. Here's me and Straza at the New York Stock Exchange. Alfonso's like, GC, have you ever been here before? And I was like, yeah, I've been here a million times. He's like, oh, but for what? And I'm like, mostly just for parties, like almost, I don't want to say almost every time, but I would say a lot of the times that I've been on the floor of the New York Stock Exchange is just for parties or some sort of ceremony or something like that. Like I've never made a trade. I mean, I've traded on my phone from the New York Stock Exchange, but I've never, right? It's
really cool, but I feel like it's becoming more of a museum than a place of work, right?
No, they rent it out for little kids' birthday parties now. Shout out Josh Brown. That was his joke like 10 years ago, but it's still funny today. Nice dinner, right? Nice dinner on Wednesday evening. There's Ian and Greg and Pat and the Schaffers out in the back. And look at Brett standing up and Straza and the Fonz. That was a good time, right?
Great time. Always awesome seeing everybody. We have such a nice team. So it's so good to get together.
100%. Shout out CMT Association. If you didn't make it, come next year. It's going to be a blast. And everybody, thanks again for watching Pardon the Price action. Make sure to give us a like and hit the subscribe button so you never miss an update. And follow me at All Star Charts on Twitter. And be sure to follow Steve at Straza. Leave a comment below and let us know what you think. See you next week.
Later.
Adios.